Good morning, everybody on Blog Talk. Good morning, everybody. Welcome to the ARMR Report. This is our week in review. I call it Crackin' Foxy with the ARMR Report because we're going to tear down some ridiculousness in the forecasting space. I'm going to go over that in a minute. I'd like to start with a little bit of a rant. That's what Crackin' Foxy is to me. Just to get some things off my chest, I appreciate you listening to it. Then what we're going to do is we're going to hop over and we're going to talk about how to trade Fed Day, okay? How to trade the market on Fed Day. And it also works when there's any big piece of economic data as we go forward that drops a GDP number, an employment number. So understanding how to trade on that day, I think will be very beneficial to you. And I'll walk you through step by step how to do that. Then we're going to talk about, you hear me say charmer trading a lot, okay? It's a particular type of day trade that we execute on our virtual hedge fund desk together at the ARMR Report here. If you want to be a part of that, feel free to subscribe both to this YouTube channel and go to the ARMR Report and see if it's for you, armrreport.com. So take a peek. But what we do there every day is we have a highlight first thing in the morning of the stocks we want to day trade. And then we use our ARMR algo to figure out which ones to focus on. And our hit rate has been insane over the last couple of weeks. I'm going to show you a couple of those trades and how we do it because it's not real hard. Stops are tight, rewards enormous. It's the best trade I can think of, right? That's what I try to do here every day on our virtual hedge fund desk. Get ourselves on the right side of probability when rewards worth the risk. And these charmer trades, the reward is enormous and the risk is minuscule. So if you trade it correctly, and I'll show you step by step how we do that. Then we'll wrap up with, kind of what are we going to be doing next week? Let's take a quick look at the markets. What are the ARMR algos saying? And what is our expectation of how we're going to execute next week? And of course, I'll get to your Q&A. So if you're live right now and I'm chatting, go ahead and fill up that comment section. So I've got questions at the end of this. If I say something you don't understand, go ahead and throw a question up there. I'll make sure to get to all of those before this is over today. If you're watching this later, please write down here, comment section. You guys aren't doing it. I don't get it. Last couple of weeks, is it just that I'm such an unbelievable teacher? You guys understand everything, and so you don't have to ask a question? I don't get it. There are no dumb questions, guys, right? Just shout out. Let me know what you're thinking, what you don't understand, and I'm happy to chat with you about it. As always, if you find this helpful, hit the like button. That elevates this process so other individuals who are learning how to invest, who need the added guidance, can find this video. And I would appreciate it if you would do that. The like button's right there. I call this a virtual hedge fund trading desk. And what it looks like is something like this. Okay. We come in the morning and we're not on a desk like this because we're all over the world. The ARMR Report, we have ARMR insiders in 35 different countries, and I appreciate all of you all over the world for being part of this. And what we're doing, since we can't be in the same city, in the same town, in the same location, in the same office, is that we're doing it virtually. We're all sitting on one massive desk that looks like that. And what we're doing is we're following the ARMR investing way. We follow strict research rules, we execute with algorithms, and we do risk management to tie it all together and protect ourselves from ourselves. Now, some of you are curious what type of a fund that we're running. Okay, there's different types of hedge funds. Could be a special situations fund. It could be a, precious metals fund. We could talk about gold and silver if you'd like a little bit later, because I'm starting to nibble and I'll explain which stocks I'm buying. Okay, so we'll get to that a little bit later in the show. But there's risk arbitrage funds. We're a macro fund, right? We're looking at big picture. Then we're doing research to benefit from the big picture themes. Then we use algorithms to execute. So when you join the virtual hedge fund with us, that's what you'll be participating in. All right, let's launch into this process today with the quick caveat that I'm sharing what I do personally with my own assets. You have to take this in the spirit with which it's intended. I'm not telling you what stocks to buy or how to buy or anything. You got to make your own choices. You're a portfolio manager on that virtual hedge fund desk. Okay. So what you want to do is figure out where you fit in the spectrum of risk and execute accordingly, no matter what I say or anybody else says, on any of these channels that you follow or you watch. Hopefully it's the only guy you listen to is me. Just kidding, right? I have a bunch of guys that I subscribe to on YouTube, and I try to take all the information. So that's great. Here we go. Let's start with this right here.
I was getting bumped off upset me, and then you birds cracking Foxy, but it's all right now that I know what it's all about.
All right. Now that I know what it's all about, we're going to be cracking Foxy on forecasting. A lot of people are talking about it. Are we in a recession? Are we not in a recession? Hey, it started with, is it a bear market? Is it a bull market? Okay. I want to just share with you right now. The point of the ARMR report, among many points, but one major point is to get rid of the noise and just execute. Okay. And the noise, the cacophony, the insanity of all of the predictions of these forecasting words are just noise to get you off the bus. They mean nothing. Are we in a bear market? What a joke. They only tell you you're in a bear market when the market's already down 20%. How does that help you? Total waste of time. But they love to spend time on it on CNBC. And they trot out a whole bunch of talking heads to debate whether or not we're in a bear market, right? You need to know up here if a bear market's coming, not we're in one, okay? And so then we move over to this discussion about recession. Are we in it? Are we not in it? I want to tell you something. This is important. I read this last week. There's like a board. There is a board of 11 individuals in academia who get together and come up with the official announcement of whether or not we're in a recession. And when they asked the chairman of that board, so to speak, of those 11 people in academia, about the process, he said that we're not a forecasting service. We only do this. We're in academia. We do this from an anthropological point of view so that people can see historically that something has happened. And yet Wall Street loves to wait to hear, when are they going to say we're in a recession? I mean, it's a complete waste of time and it doesn't make money for anybody. And the guy who's running that board basically said it. This is about looking in the past so that people can mark it down in history books and know that in 2022 we had a recession. So move on. It means nothing. So you might say to me, well, it means something because we're trying to predict what the Fed's going to do next. Okay. Running money, predicting what the Fed is going to do next, in my opinion, is an absolute total waste of time. Not only do you and I have no idea what the Fed's going to do next, but I submit to you, the Fed doesn't know what they're going to do next. The Fed told us a year ago inflation was transitory. Then the Fed comes out and says, oh my God, it's crazy inflation. We got to jack up rates. Then the market rallies this week. And CNBC will tell you it rallied because the Fed is predicting or made some comments, right, that they won't have to raise rates that much more. We could see the light at the end of the tunnel, blah, blah, blah. Jim Bianco is an analyst that I respect. I follow him on Twitter. By the way, you can follow him on Twitter. You can follow me at Bret Rosenthal. Feel free to look us both up because I like to retweet some of the things he talks about. And I got to show you this chart because it's just so brilliant. And I want to share this thought of his. And then we'll move on and talk about how to trade on Fed Day, how to make money trading large economic data dumps and Fed Day. We do it over and over and over again at the ARMR Virtual Hedge Fund. And we make money. Look, nothing's 100%. I mean, ARMR insiders, they're watching right now. They'll tell you, we do it every single time the Fed has an announcement. And I'm going to walk you through how we did it in a minute. If you find this information helpful, don't forget to hit the like button. All right. I got to share this chart with you. This was brilliant. Here's a chart of from Jim Bianco Research, okay? All right, of Wall Street inflation forecasts going right to 2% forever, okay? This is the 2% target. Inflation obviously is above it. It crashes below it. It rips to 9%. And yet inflation forecasting is almost always talking about 2%. So we've ripped to 9%, and the inflation forecasting is for it to go down to 2%. The point of this, the point of that is that forecasters on inflation not only are always wrong, but they basically stay at one level all the time. This chart goes back to 2018, but the data goes back a lot further, and it's always the same thing. The forecasters pick some number, and even the Fed says that things are transitory, but they're always wrong. So worrying about a forecast is a total waste of time. And I'm going to wrap up with this thought because I just thought it was really, really interesting. It was a history lesson from Jim that I wanted to share with you. His opinion, which I thoroughly agree with. And here we go, forecasting. So isn't that a great way to wrap up Crackin' Foxy on forecasters, right? Because this is going to be a forecast, which means it's just a fun conversation and should have nothing to do with how we run money, okay? But if you're going to hold my feet to the fire and say, where's inflation going? Is it going to come right back to 2% like all of Wall Street's telling you it's going to do? I'm going to say no. I'm going to say the market rallying last week because the Fed thinks that inflation may be peaking is ridiculous. Okay? But here's a good reason why. This is a very interesting history lesson, and then just mull it over the weekend. Tell me what you think in the comment section here after you think this through a little bit, okay? After the World War in 1944-45, the U.S. economy lost a couple million jobs. And we didn't mind that. Those jobs were about building tanks and warships, and the war was over. So a couple million jobs were lost. And going forward, everybody was looking into the future of what the new economy would look like. Those jobs, those people get put back to work in new ways, right? Nobody was thinking after the war that the economy would go back to what it was before the war got started. Everybody realized there was a breakup of Pangea from a economic sense, and that a new world order was coming, right? And so fast forward to 2020, and just try this on for size. Just think about it. We've had a loss of a couple million jobs because of a pandemic, and it brought about a whole new way of doing business, work from home and all these things. Don't argue with it. Just listen for a second, right? So there's been just a paradigmatic shift in how the market works. We're past that now. It's 2022. And yet every forecaster you can find is waiting for the economy to go back to what it was in 2019. And yet there's been a paradigmatic shift in the world order after the pandemic. One example, the manufacturing that's done in China will probably, over time, this is a forecast now, so feel free to throw stones right there in the comment section, okay? It will never be the same. The world has learned that you can't outsource all of your manufacturing to China or quite frankly, any other country and feel safe and secure. Last week, China shut down the province of Wuhan again, because of what were there, something like 4 or 5 cases of COVID? Okay, totally unstable. So there's a new process, a new economy going to develop. It's not going to be 2019. And I would argue, and for the sake of time, I'm not going to dive into this rabbit hole any deeper, but I would argue that the new economy, which is probably onshoring, some type of manufacturing going on here in this country, but however you want to look at it, it's going to create higher inflation, right? Because the whole point of outsourcing to China was to bring down costs everywhere, and it was deflationary. Okay, and you fire up the steel mills here, and you do more E&P on the energy sector here or whatever, you're going to see inflation stay high for a lot longer. And yet most forecasters are sitting here telling you the world's going to go back to what it was like pre-pandemic. All right. Foxy waxing is over. Let's move on to the next topic, how to trade Fed Day. I want to show you a chart. This is the S&P, okay? So first of all, we're going to get into predictions of what I think the market's going to do a little bit later in the show and how I'm going to respond next week. But what I do want to walk you through is a step-by-step approach. And this is our day trading screen here. So I'm going to take all of these charts, are 3-minute bar charts. All right, so S&P, NASDAQ, small caps, Dow, and VIX. But what we're going to do is focus on the S&P. There is a section in the ARMR, in our ARMR website. So ARMR Insiders, you can go to the website. You guys know this. It's in the Slack room, our virtual trading desk. You're watching these screens as we're trading. So ARMR Insiders are watching this as it's happening. If you can't trade that day with me, you want to see what happens, you go to the website. I upload the plays in the ARMR Day Trading Playbook. Now, ARMR 2.0 is coming out in about a month, we hope. So a brand new website, totally revamped, a lot more information, and in a manner that I think is a lot easier to access. So you'll be able to go to the playbook, click on Fed Day plays, and see exactly how we trade Fed Day over the last X amount of Fed days. And you'll notice, holy smokes, it's the same trade every single time. High probability of success, rewards the worth the risk, put the capital to work, make money. It's not hard, okay? This is how we did it. If you enjoy this information, you find it helpful, don't forget hit that like button for me over there, all right? So, and share this video for those out there who really need the help. I'd love to help them. And at the same time, we continually build. We're always building. As new subscribers come in, I don't view them as subscribers. I view you as portfolio managers on our virtual hedge fund desk. So it takes a certain type of person to come into that fold. Okay? We're looking for certain types of people who want to be part of that process, that adventure. Okay? That camaraderie where we're all working together towards a common goal of making money and protecting assets and living the dream. Okay? So if you have an interest, certainly join us and share this with anybody you think would fit that profile. So this is Fed Day. Every bar, I want to walk you through step by step how to make money trading the S&P. And look, you don't have to trade the S&P. I'm going to show you the S&P. You could trade SSO, which is what I trade, twice the S&P. You could trade 3 times the S&P, SPXL. You could trade the NASDAQ, the small cap. You could trade options on it. I don't care how you want to do it. Okay? I'm going to show you SPY because it's the easiest way. You could be trading futures, index futures. However it works for you, this trade is a no-brainer. I'm going to walk you through step by step now. Okay? Step 1, I don't care what the market does in the morning. I don't trade. That's what the white bar is. I don't trade all morning. The reason I don't trade all morning is I don't want to muddy the waters. I don't want any I don't want a loss in the morning to get in the way of what I know is a high probability entry point where the reward is dramatically worth the risk. Okay. So step one, I don't trade the indexes in the morning. Now, this was a gap up morning. When you go to the ARMR Day Trading Playbook, you'll see that this trade works. It doesn't matter if the market gaps up into the number, is flat into the Fed announcement, is down into the Fed announcement. This strategy works. We don't trade in the morning. Step two, this right here, this reaction right here is when the news drops. It's 2 o'clock and the news comes out. The Feds raised 75 basis points. A lot of hysteria. I don't trade the hysteria. I don't try to guess the direction. We wait for the Fed to start speaking. When Chairman Powell starts speaking, which is right here at 2:30, okay? We wait for the reaction. So the first reaction was a big down bar. Had this gone lower, we would have been shorting the market. It didn't go lower. It had an immediate reversal, taking us outside of the white box. Okay? That's the buy trigger. We get long right there and we ride it all the way to the close. We captured the entire move to the close. When that trade works, you don't need to worry about, you don't want to have a tight stop. You'll stop yourself out of big gains. It's going to run all the way to the close. What got me out of the market, what ended up getting me to book my profits right here, I'm going to show you. Watch how this works. This is something you can write down and try to use it in your own trading. It really works for me on certain trades that are skyrockets like this, where they just start to go berserk to the upside. I like to have a trailed stop where if the asset goes below the low of 2 bars ago. Now, I'm using 3-minute bars. So that means if the asset price goes below the low of 6 minutes ago, I'm out. Watch how that works. We're in right here. This is 2 bars. Okay, so this is another 2 bars. Right here, it does not go below the low of that bar right there. All right, can you see this? Let me give you a little more clarity maybe. Okay, so right here, it doesn't go below the low, rallies again, comes down, does not take out the low. Okay, rallies. It still hasn't gone below the low of 2 bars ago until right here. That's the bar that takes out the low of these 2 bars. That marks the end of the move. And I'm exiting right in here. Okay. So as a wrap up to this conversation, and then what we'll do is get to charmer trading next. Okay. We are making mad money. Charmer trading. You hear me talk about it. You see it in my Twitter feed. I'm on Stock Twitch sharing with you what we're doing. So I thought today what I'll do is step by step show you how we charmer traded last week. And we've been doing this every day going forward. So I'm going to share with you how we do it. It's a step-by-step process, just like trading the indexes. So we'll get to that in a minute. But just to wrap up this thought, this type of trade works, whether it's the Fed announcement. Sometimes the Fed minutes come out and this trade sets up. Sometimes the GDP will drop or the non-farm payroll number will come out and you'll get the same type of hysteria, consolidation, breakout, let it run. Okay. So it's a way to day trade and it's an effective way to day trade. And if you want to be part of that, consider joining us on the virtual trading desk. Now let's jump over to charmer trading. What is a charmer trade? If you like this information, hit the like button. Don't forget. A charmer trade, we've been managing capital. I've been managing capital for 35 years. Okay. I ran hedge funds for a decade. I run my own personal capital, run capital for some individuals now, family capital, right? So kind of like a family office now. And I started the ARMR Report. Geez, I started doing YouTube videos 5 years ago. And the ARMR Report, 2020 is when we started the ARMR Report. And one of the original ARMR insiders, his name's Chad. Chad has a particular way of trading incredibly small micro cap FOMO type of stocks that I would never trade, right? But over the years, he's shared with me what he does and wanted refinement, because some days are great, some days are blow up. So how do we refine it? I said, you know what, Chad, I'm going to take some of these ideas you've got and I'm going to run them through the ARMR algos, and we're going to work on a strategy of how to make money trading these names. So while Chad may bring in 10 names into the room, there's really only going to be 2 or 3 that set up a high probability entry point where reward is worth the risk using the ARMR algos. And so how do we identify what those 2 or 3 are? And then we want to trade them, right? Our success rate right now is insane. I'm not going to tell you the how high the rate is because you just won't believe it. And so what's the point? Okay. What's the point of sharing it? And let's see where we are over time, right? So we've been running the strategy the last few weeks and it's just insane. But the reward is so significant on these names versus the risk that we don't even need a strategy that's right 8 out of 10 times. We could make money if the strategy was right probably 4 out of 10 times, 3 out of 10 times, because the amount of money made is enormous and the losses are small. Okay. So I'm going to walk you through step by step how we do this. Every morning we come in, and so we call them charmer trades, right? So it's the C for Chad, because he was the architect of the original idea. And of course, ARMR, because we're using ARMR algorithms, we call them charmer trades. Okay. But it doesn't just have to be Chad who brings an idea into the room. This is a virtual hedge fund. We have portfolio managers on our desk. Okay. Other ARMR insiders are adding ideas in the morning. What do you think of this one? What do you think of that one? We run it through the algorithm and we'll trade it. It can come from any ARMR insider. But here's the basic idea of a charmer trade. We're looking for a news event on the asset the night before or early that morning that's a game changer for the company. In essence, we're probably catching people short. This is what creates the explosive move higher. Or what we're doing is we're catching a flame that's igniting the FOMO crowd from Reddit that rips the asset higher. So what we're looking for is a story like I shared with you a couple weeks, I think last week, we made money on Canoe, GOEV, right? Because they announced their deal with Walmart. That was a game changer. Stock was down big, probably a lot of shorts. We got on that trade, made a fortune, it skyrocketed. The following week, we hooked into Workhorse, right? Workhorse announced follow-on deal with UPS. Stock was down huge. That's a game changer. We hooked into the stock, boom, made a fortune, right? So let me show you the step-by-step trades of how we identify, once we know the idea, how do we identify the time to buy it and how to trade it? So let's go through step by step. Here's an example. Some of you may be familiar with PGY. Okay. I'm going to share with you trade we executed right here. There's a couple of trades here. I can show you. It's exactly the same trade. But we'll start with this one right here. Okay. Step-by-step process. Let me go like this so we can, whoops. Just a sec. There we go. All right. Asset starts trading in the morning. It's on our list. We share this list. All ARMR insiders know here's the target that we're looking for. PGOI is on the list. Okay, and I'm going to blow this up so you can see this trade right here. Okay. We use a certain trigger. I'm not going to go over the details of the trigger right now. When you're on the live desk with us and you're part of our virtual hedge fund, I'll show you exactly what this trigger is. But basically, when the box goes white, we have the condition for a buy trigger. And when the box goes green, it's time to buy the stock. So step one is the white. And this particular trade went white and green on the same bar. Okay. So you get long right there. I always book a piece of a profit on the initial like extension pop, that first big up bar. I'll book, I don't know, 20 to 25% of my position, and I raise my stop to break even, and then I leave it alone, see how much money I can make. In this particular case, the stock ripped higher, and I want you to look at how this low of 2 bars ago really works on a trade like this. Look at how this asset rallies and never takes out the low of 2 bars ago. So this down bar takes out the low of the previous bar, but does not take out the low of this bar, right? Okay. So you need a closing 3-minute bar. So it hasn't done it, hasn't done it. No, no, no. Right here, there's a tail that takes out the low of 2 bars ago, but still in the trade. And then right here, you would say, that's it right there. It just took out the low of these 2 bars. And we're certainly out of the trade on that down bar right there, booking a significant gain. I mean, where were we in the stock? Somewhere around $6.30. And, you know, the trade was over somewhere around here, $10. Okay, that's a huge profit in a very short period of time. And then it went again. It had another, trade all over again. You could have done the whole thing again. Now let's look over here. Here's another day. Same setup. A little bit different this time. I'll show you the white box again. Same setup. It's on our list. That's the white box right there. That condition was set up as a white box, and the green box takes out the high of that condition. It's an ARMR algo condition that, again, if as an ARMR insider, I'll share with you how that works. It's a proprietary algorithm, right? So there it is, and it pops up right there. There's the entry point. Stock's trading at, I don't know, 11 and 3/4 or something like that, and just absolutely skyrockets. Okay, and sometimes what I'll do is follow this blue line here all the way up, book some profits in here. Certainly just took out the low of a couple bars ago. So what I tend to do is sometimes book a partial profit when it takes out the low of a couple bars ago, maybe keep the position on. Now, here's something I want to share with you that what we actually did on this day, and it's very important. We talked about it on this day. I want to show you this is something that's really important that I use and I share with insiders. This is something you could write down for your day trading book. Okay. So there's a couple of rules. You can grab a pen, piece of paper, write this down. One rule, the low of 2 bars ago, when you're trading using 3-minute charts, the low is 6 minutes ago on a stock that's skyrocketing is a great trail stop. The second thing is if you get stopped out and the subsequent bars do not take out the low of the bar that stopped you out, you put the trade right back on when the low of the stop bar, the high of the stop bar gets exceeded. Okay. And that's what happened right here. So I can see my time limit is running thin. I want to get to what we're going to be doing next week. Okay. But I just wanted to share that picture with you right there. That bar takes out the high of the stop bar and the thing rips again. Okay. GOVX. I want to share this trade with you. All right. So monkeypox, charmer ideas. what makes it into the charmer idea realm. Okay. Sometimes there's a macro story that's breaking and you're getting total insanity from the FOMO crowd, and we can make some money on that. Okay. So we traded GOVX all week. I'm going to share with you how we did it right here. It's the same three-step process that I just went through on PGY. So take a look here, first of all. All right. The trade happened right here. This was a day we caught. The white box is here. It's a simple trading. It's not that hard. The algo tells us the white box is right there. And when we take out the high of that box, that's when I put into the room, all right, everybody, we're getting long GOVX. That's right about here. Okay. I don't know, $1.75, and the asset, goes berserk, goes to $2.40 something cents. We booked our profit right in here. All right. And then the stock went again, but we were pretty much out right there. All right. And again on Friday, did the same thing. Now, I wanted to share with you this chart because this is incredibly important, and it goes to a question that an ARMR insider asked me. So I'm going to walk you through. This is one last trade just so you can see it. And we just do this every morning looking for the charmer setups. Okay, so we had a charmer setup right in here. And this was the green box. And so we were getting long right in here, which is somewhere around 2.5. And you can see the stock literally walked up from 2.5 to a high of 3 and change. And our exit bar was right in here. That perfect median bar reversal was the exit. But now that you've seen how charmer trades work, and if you find this information helpful, hit the like button. I appreciate it. Consider joining us, armorreport.com. All right. I'm going to hop into what we're going to be doing next week. We're going to look at the stock market. We're going to talk about how to trade and how to invest next week. But I'm going to wrap up with this thought because it's very important. We had an insider ask us, would I charmer trade for conservative accounts? And I want to say unequivocally, I do not trade for conservative accounts, charmers. I don't day trade for conservative accounts. This is for aggressive money only. Not for a second do I get lost in the excitement of how much money we're making on these trades. I recognize that I'm trading a monkeypox idea. Okay? It's a joke. It's a total joke. The stock's going through the roof because of FOMO. It's a $2 stock. People are driving it higher on Reddit. Don't ever lose focus on that. Look at this chart here. The reason I don't put it in a conservative portfolio is look at what happens right here. Okay? The stock implodes in a 3-minute window. It gets destroyed. And it got destroyed. Because the FDA came out and talked about monkeypox and didn't mention this company's product. Take a long, hard look at that. Every time I put money in a charmer idea, the next 3 minutes could get blown out of the water. Now, I have stops, but sometimes stocks like this gap down below your stop. Sometimes they get halted, news pending. News is negative, stock gaps down. These are aggressive trades for aggressive traders. Enough said. Let's get on to the week in review and how we're going to trade next week. The first thing I want to talk to you about, as always, is looking at the indexes themselves and what do they tell us. The risk monitor is red. It hasn't changed. Gamma information's positive, so there's some the positive option flows that are driving the market higher. We had enormous short positions on the S&P going into the Fed news. The Fed news was deemed to be less hawkish. Shorts are covering, driving the market higher. It has not changed the ARMR risk monitor. Investors Business Daily, I follow the IBD. I respect their own risk monitor. They went green on Friday. They talk about how certain stocks are breaking out and going up, and that's great, but be cautious as you start to buy new stocks. That's where we're at. I want to show you the chart here. And let's just talk about the S&P real quick. Okay? Head and shoulders top, breakdown. Market's been trading sideways since May when the Fed started to raise rates aggressively. We went from the June rate hike up to the May rate hike low after the July rate hike. The market's done nothing since May except for extreme volatility, and the ARMR report has been spending a lot of time in cash, protecting capital, and day trading. All right? There are times when the risk monitor won't go green and the market goes up. It happens. It happens with every strategy. Okay? I could change the strategy so that I try to buy every bottom. You'll take a lot more losses on the way down, but you'll catch a rally like this. I didn't write a strategy like that because, quite frankly, everybody can do it. Just buy every time the market crashes and hope that it goes up. Okay? I have a strategy designed to look for confluence. When I see when the big indexes are all performing the same, we get confluence across the board that tells us institutions are putting real money to work. When you get a lack of confluence, often what that tells us is, yes, there's a short-term bear market rally, probably on the back of short covering, but, and I hate like predicting the future, so I don't know what's going to happen next. If this thing breaks out of the downtrend, I'll get an opportunity to put money to work, and I will. But what we see right now going on using our algorithms is just noise in an overall downtrend. So for an investing portfolio, not a swing trading, not a day trading, but for investing, which is what the ARMR report was created for, okay? We're not willing to put investments to work on the rally that occurred in the last 2 weeks. That's what the risk monitor is telling us. It tells us that the risks versus reward is out of balance. So what would happen next week to get us to put money to work? And where are we putting money right now? First of all, you can see the market rallying right up to the downtrend. All right. So I submit to you that this rally is induced by the fact that the market's hoping the Fed is done and inflation is going to come down. I submit to you inflation, our macro view, our opinion right now, the ARMR report is that it's not going to come down. Okay. The market's wrong about that. I don't know. If the risk monitor goes green, I'll put money to work. So I'm not going to force my will on the market, but I'm just telling you right now, as long as we're red, my opinion is that inflation is going to stay hot for longer than anybody expects. And what we're going to have is a stagflation situation. We have a recession coming, and yet inflation stays hot. That's a hard market to manage for the Fed, which, by the way, is terrible at predicting. So everyone loves to point to what the Fed may do. But just a year ago, let's remember, the Fed said inflation's transitory. So they haven't the slightest idea what they're doing, just like everybody else. And what I find amazing is that we layer this confusion on top of each other, right? So the Fed doesn't know what they're doing, which is clear. And go back decades. Ben Bernanke told everybody there's no financial crisis in like February of 2008. I mean, he was either lying or he just didn't know what was going on, or a little bit of both. Chairman Powell says inflation is transitory. Everybody, anybody with a brain said, are you out of your mind? Inflation is not transitory. But he was sure it was. And so now we're layering on top of a house of cards a prediction of the economy, right? It's ridiculous. The whole thing is ridiculous, getting back to Crackin Foxy. But anyway, so my macro assumption is inflation is going to stay hot longer than anybody expects. The recession is here already. And we're going to see that reflected in probably some unemployment numbers that get ugly. And yet the Fed won't be able to help the market because inflation is going to stay hot. We have a problem, right? So how will I be trading next week? The way the algorithms are written, I don't see any risk on entry points going to happen next week. Okay. So what the ARMR report has to see is a consolidation up here that resets the algos that'll give us a shot to put money to work over the next couple of weeks, or a sell-off back down to support that resets the algos that gives us a chance to put capital to work. Or the third option, which is the one I lean towards, which is the one I'm expecting. Who knows? Okay. Is that the market is rallying right to the downtrend, right to the downward trending 200-day moving average. And it's going to put in a reversal top up here and give me a chance to buy index puts. That's my number one expectation. Okay. This is a rally in an overall downtrend up to the top of the trend. So you heard it here first. My expectation is that the market will stop the rally somewhere at the downtrend. And by the way, sometimes and very often it overshoots just to mess with everyone's head. They'll have a big up day that breaks it out of the downtrend to fanfare and excitement. And I'll feel like my head's in a vice because I'm not long. Okay. And then like the very next day, it'll implode. I mean, that's generally how these things work. So it's possible it's a nice, orderly little top that forms and breaks down. That would be easy. Okay. But usually it isn't. There'll be some woo excitement, pow. Probably it'll happen on a terrible employment number. Okay. Next week will be next Friday will be the employment number. It'll be showing probably an increase in unemployment, right? And people will think, hey, that means the Fed can stop raising rates, and they'll jack the market up on that. And then, of course, a day or two later, there'll be inflation numbers that come out that are hot, and the market will be like, what's the Fed going to do now? So that's just a scenario. But I'm expecting this market to come right up to the 50-day, the 200-day moving average downtrend, right to these downtrend lines, and then roll over and break back down. Okay, that's my number one expectation. Okay, if it's able to consolidate up here, if it's able to either consolidate or it goes right here and immediately pulls back and makes a higher low, then I might get long. Okay. But if it goes right here, pops above, I'll be waiting for the reversal back down. See, like right here, it's exactly what the Dow did right here. Had this gap up day that made it seem like the downtrend's over. It gapped up the following morning and had a huge inside out reversal day. And when we see that, I'll be putting index puts on by the end of that day. Okay. Here are the changes to the portfolios of the ARMR report. We have a position on, actually not a change. We have a position on treasuries, although I hated that close. That close was just awful. So I have a position on it, but the stop is pretty tight. Takes out the low of the 50-day moving average. And, you know, that would really confirm my opinion that that a short of the equity index is in the offing. If treasuries can't get above 120 TLT, then I think the stock market's dead. Okay. But if they could blow out in here, I'll have a position on the long bond. I also added precious metals. And I'm going to get to your Q&A now, and we can go over this if you want. We bought some physical gold right here. So we bought literally so far the low, and we added to our position right here. While we were adding to physical gold, we also added a position in physical silver. Okay. I don't want to get too deep into the discussions about precious metals unless you want to ask me that on Q&A. So I'm going to go to the Q&A now, load up the board. I'll answer any questions you have. And if we get into precious metals, I'm happy to go over it with you. Any questions or comments you've got, if you're watching this in replay, throw the comments down here. If you got questions that I don't cover, I'll be happy to answer them for you. And as always, guys, if you found this helpful today, hit the like button. I mean, it's not that hard. Just hit the like button, all right? So I can stop asking. Here we go. Q&A, and thanks, guys, for giving me the time to go over all that. There's a lot to unpack on these Saturdays. Don't forget also, you're helping me out. So I really want to thank you for being here and listening and going over this with me, because you're helping me order my thoughts so I know how to execute next week. All right, TMO, MD. Okay, listen, TMO, a really good looking idea. We're going to look at it on the O'Neill chart. All right. Thermal Fisher, love the chart. Relative strength going to a new high. Stock's going above 600. They're involved, actually, Sean. So funny, Sean. I was talking to, I'm going to call him a friend now, like a really good friend. He's been a client of mine since the first year I got into business. I was working when I was in college, but when I got into the business professionally, I think he was my first client ever. And he still is today. And he actually stood up at my wedding. So great guy. And he's a retired physician. And he was talking to me about TMO this week. Because there is a technology that they're pursuing that is unbelievably effective in identifying breast cancer well before any type of a mammogram. It's like pretty incredible. And it may be the future. And he was a radiologist, so this guy would know. And so he loves the idea fundamentally. So among other things that they do, he thinks that there's some big potential there. So I love the chart pattern, and who knows, it may be a winner. Certainly something to have on the whiteboard. MDLZ. But he was reading a white paper about what they're doing in breast cancer, and it's pretty impressive to him. Let's go back when we talk about these ideas and why you put these names on your whiteboard. Don't forget last week's video. I did a step-by-step 7 stages to how the ARMR report adds a name to the watch list, what we call the whiteboard. I need something new and exciting. That's part of the process. It's going to bring in institutional capital. Okay. What is new and exciting about that stock? If you've got something, Sean, that's great. Okay. But like TMO, I get there are some really interesting things inside that company that could be new and exciting to bring in capital. But what's happening in MDZ? Or is it just a stock people hide in because we're in a recession and people are still going to chew gum, and eat crackers? Look at the earnings and revenue of the stock over the last couple of quarters. Where's the excitement there? Nothing. I mean, just dead quiet. So I need something happening, but instead of just a chart pattern, I want a chart pattern combined with explosive growth, explosive new product, a new management team, something that gets institutions to drive capital in. Pinterest is a great example. Okay. Pinterest is a great example. New chief executive right here. Okay. At some point, if this business is not going to, totally go away, there's going to be a great entry point in Pinterest at 20. Probably after the next earnings announcement, they're probably going to have a terrible number, and the CEO is going to write off, all the transgressions of the previous administration and come up with a turnaround plan. So I don't need to buy Pinterest in front of these earnings numbers. Roku destroyed, Snap destroyed. I mean, only Etsy's been able to go up on the news. So I don't need to own Pinterest in front of the news, but it's on my whiteboard because of the new CEO who comes out of Google. It's perfect example of what I look for. Hit the like button. Thank you, Festeroso. Appreciate it. It's not that hard, guys. Just go down there and click the button. All right. These are beat up innovator names. Okay. If you think the Fed is going to start lowering interest rates and adding liquidity, then these names are going to be the best place to have capital. right? But I don't think that's happening right now, and I don't have any information to share with you. But I will tell you, Festeroso, that NET is on my whiteboard. Pinterest is on my whiteboard. BNGO is not. Wheat and precious metals. Okay. So you're asking me a precious metals question. That is a god-awful chart pattern with no reason to buy it. So let me get to what I'm willing to buy in the precious metal space. Okay. This is what I'm willing to buy. Physical gold as it trades in a huge rectangular pattern, and silver, which comes right down to this last support area, which was the cup and handle breakout of 2020. It holds it and reverses back above. So I'm willing to buy silver. Okay. I'm willing to buy silver. It held it and it moved above. So you say to me, well, why wouldn't I be willing to buy WPM? Well, first of all, it's in a free fall. There's no end in sight to that downward trend. So I don't like to catch a falling knife. Second of all, the leader in the space, Newmont Mining, which is the leader in the mining space, is in an absolute collapse. An utter collapse. Okay? So my opinion on the mining stocks, we need to earn the right to take more risk. And the way we do that is by owning the metal first, which has a better chart pattern and which holding the lows that are a key location that they're both holding. Let me show you Sprott physical gold again. Okay. Right at the bottom of the channel. Okay. So we bought the bottom of the channel. If we are able to see net worth rise, because, and by the way, I thoroughly expect the gap of 2 days ago to close on the metals. I really do. If they leave that gap behind, I'll be shocked. So what I'm going to do is wait to see. I haven't finished off my buying. I want to wait to see what happens when the physical metal comes back down. If it makes a higher low and we get another, in fact, not another, if we get an ARMR algo entry point, then I'll finish off my mining position and I'll go look at miners. So to be clear, the ARMR algo tells us to avoid precious metals. I bought it anyway, right at the low of a key support line. If that low holds, what I expect over the next couple of weeks is a formation at the bottom that will trip the ARMR algo to give us a risk on entry point, at which point I will finish off my position size. So I'll own more and I'll begin looking at the mining stocks. So be sure to follow the ARMR report and join me on those weekend calls, these weekend calls, or become an ARMR insider and you'll know exactly when we're doing it during the week. Join us on the virtual hedge fund desk. Okay. And you'll see it happening. And I'll say, okay, here it is. There's the entry point. Deb, how are you? Nice to see you. Thoughts on PSLV? All right. So I just answered it. PSLV. We added a position in PSLV at the end of the week. Okay. And we're looking to build it out. I just went over that question. So volatility compression, VIX touches lows. Do you see opportunity in front of August? Understanding VIX, it's almost impossible to understand VIX and try to predict what it's going to do next, because it's like animal spirits of fear, right? And so we've just gone through a terrible bear market, and VIX has only gone down. We're at the bottom of the channel. We're at the bottom of the channel. So what I could say to you, JMD, is that the time to own VIX is at the bottom of the channel, not the top of the channel. That's all I can say there. It's about animal spirits and fear. And right now, there's no fear. So you buy an asset if you want to hedge yourself. You buy an asset when there's a fear indicator. You buy it when there's no fear. Right? Right now, it's just this wonderful moment. The Fed's done raising rates. Everything's going to be fine. Inflation's going to go back to 2%. Nobody cares about being protected. Make your own conclusions. And VIX is not for every account either. So, and let me just say one more thing about this, JMD. I have personally set up a position. It saved me so much money. Instead of trading VIX every day, instead of positioning VIXY in a portfolio, I've taken a small amount of capital in the options market out into August to own a lottery ticket. If it ever happens, I'll have protection. Probably 90% of the time it won't happen, and I'm going to lose that money. And I don't mind, because it stops me from trading this asset day to day, which is mind-numbing insanity, because you see things that make you fearful and the market doesn't care. Right? So I'm out of that game. I don't trade the asset. I don't day trade. I don't even care about it, except for I look at it in relationship to other markets. And I just have a lottery ticket that I set up in case I need protection. That's how I'm handling VIX. Can I give an example of a low fee blue chip index? Minimum investment, this type of fund. I don't know what you mean by that. Example of a low fee blue chip index. You can buy any ETF you want, Deb, and it doesn't have any, it doesn't have fees. I don't understand what you mean. You could go buy a blue chip index, go buy the S&P, SPY, go buy a QQQ. And there's no minimum investment. Do whatever you want there. But you can do that research, Deb, by going to ETF.com. Now, what's the word I'm looking for? ETF.com is not always right. Okay. So don't take what they wrote as gospel. They're taking a bunch of information and making it easy to access on a website. So you have to follow through on what you find. You go to ETF.com, you look for a blue chip index, then you drill down into the manager of that index to get all the information you need. Okay. That's what I would suggest you do. But I mean, I wouldn't buy mutual. I don't buy mutual. I never bought mutual funds. I mean, ETFs are great. Just buy an ETF and you're done. That's Sky. How are you? Nice to see you, man. Fire selling GPUs going into earnings. They're fire selling GPUs? Look, I think there's a real problem in the semiconductor space. And I know there's some of you trying to, so I would be in agreement with you, Sean. I'm not short selling into earnings anything, because I don't do that. But Intel implosion, Qualcomm disaster. So I think there's a real problem in the semiconductor space. That's pretty clear. And I don't think it's going to right itself anytime soon. And I would lean more negative than positive. But, you know, I don't make those type of trades, Sean. So I can't help you on that one. Stephen, nice working with you last week. You had a couple great trades, and I loved it. Well done. Oil and gas sector. Let's look at the top 3 ETFs that I have a focus on. I want to own XOP. I should have bought it right here, and I didn't, and it's just skyrocketed. So what held me back, as you know, Stephen, is this looks like a blow off top and implosion. And typically, you're not going to get a V bottom off of that, okay? So what's going to happen right now? It looks like a bit of a V. But what I'm looking for is a sell-off, pullback, double bottom consolidation, making a higher low that I'm able to buy. So I'm just not chasing energy right now, and it's making me feel a little crazy. Like I probably should be chasing energy right now. Right here was the green box. I should be long AMLP right now, and I'm not. Okay. I should be long, where's XLE? Okay. And this is off of the earnings announcements of Chevron and Exxon. They look great. And I should have bought the 200-day and I didn't. And what I'm not going to do is chase the market right here. But on subsequent consolidations, yes, Stephen, I want to rebuild my energy exposure. And here's another name, that I probably want to own, which is CCJ, right? Uranium is really starting to look like it's setting up again, and CCJ is the way to do it. Okay. So you have this big move here, and then it imploded, set up a double bottom. So, uranium is a little bit further along than traditional energy. Like this looks like where energy is right now. The initial collapse, the rally. Now I'm waiting for the double bottom to set up. But CCJ and uranium's already done that. And so this is the idea that I would really want to be long first. This is the idea to really be long, I think, right there. And while I'm not buying anything in the midst of the hysteria of the rally last week, early week, if this is a real good market that's going to start to unfold, what we're going to see is weakness Monday, Tuesday, and then strength in the back half of the week. That's what happens in a bull market, okay? So if the market gaps up Monday morning, I'm looking to short. But if the market sells off Monday and Tuesday, and I get a shot at CCJ a bit cheaper, I might put that into an ARMR swing portfolio. So if the risk monitor is still red, I'm not putting money into most of my portfolios. But I do have swing trading portfolios, and I might put some money into that, okay? So we'll see. No, it's not a cold. It is very tasty. I'll tell you my brew. Are you ready for this? It's delicious. I take a low, there's mold in coffee and it creates acidity. All right. So I take the lowest mold coffee I can find on the market. I'll have to get the name for you. I think it's like Cameron. It's a great coffee. So very low acidity. I put in a delicious, pure, powdered chocolate. No sugar. Just a rich, rich chocolate. I think it comes from Ecuador. It's delicious. And I put MCT oil in, which is coconut oil. It's very good for you. I mix all that together with whatever your favorite milk is. I use oat milk, okay? And then I pour in this brew, and it is so good. I wish I could share it with you. The results of my poll. I think most people think I'm wrong about Sam Fried being the new JP Morgan. But we'll see. Time will tell. Time will tell, Looking at Bitcoin, as long as we're on that topic, Bitcoin's a great harbinger of risk assets. So if Bitcoin were to blow out above the 50-day moving average, that might be real bullish from the market. But if it puts a double top in here and breaks down, I think that's a great lead indicator for what's going to happen to NASDAQ. And so I'm watching Bitcoin closely. And of course, MSTR, that trade's really working. Will it break out in here? I don't know. I was on the conference call of Silvergate last week. So for ARMR insiders, those of you who don't know, the ARMR report, what we do is we listen to conference calls together, and I talk you through what I'm hearing. I've been doing this for almost 35 years. So talking to management, listening to analysts ask questions, all of that allows us to create our own proprietary flow of information. What does all of it mean, right? And then we decide, that's one of our 7 steps to what makes it to the whiteboard. I think there's a very good possibility, Sean, that when all of the dust settles, if we're willing to assume that cryptocurrency is here to stay. So if you're under the assumption that everything's going to go to zero and cryptocurrency is a bad joke on the financial community, then what I'm about to say doesn't matter. But let's assume that cryptocurrencies are here to stay and Bitcoin's not going to go to zero. If that's the case, then all of the collapse of all of these other exchanges are making Silvergate probably the best asset in the group. I bet Silvergate is like, I bet Silvergate comes out of this as the Goldman Sachs of the industry, of the JP Morgan of the industry, as a bank. I think that the problems happening everywhere else just drives more and more institutions to do business with Silvergate. There you go. There's a thought. Short Coinbase, long Silvergate, probably a great pair trade. Coinbase is the retail guy and Silvergate is the institutional guy. That's probably a great pair trade in my hedge fund days. Aris, nice to see you, brother. Let's take a look at INMD. Oh, that looks like a great chart. Let's get on that conference call next week, Aris, and see what we could see, because that chart pattern speaks volumes. So let's see what's going on in the business that's driving that that rally off the lows. Okay, quarterly earnings not bad. Revenue's growing at 30% clip. So you've got some of your basic necessities to get it to the whiteboard. Then let's find out what's new. Let's listen to the conference call and see what management's saying, and see if we can figure out why that stock should be on the whiteboard next week. By the way, thanks, Ares, for getting us into the SMR trade. So not everybody, when it comes to charmer trading, anybody on the desk that's got an idea of what we should be trading, share that information all day with me. Just shout out, hey, Bret, take a look at this, and we'll throw it up onto the day trading board, the ARMR algo for day trading, and see if we can find an entry. And so you gave us this idea. Ares was like, hey, Bret, what about this? And you were absolutely right. We put the trade on and we made money. So here's another charmer trade from Friday that made money for us. Okay. And the setup was right here. The white box setup was right here. Okay. And of course, the bar that we bought was the breakout right there. Okay. And what we're looking for is a convergence of volume weighted average pricing, ARMR VWAPs, ARMR average true range highs and lows. And when they all come together, it creates that white box. And a pop above it is the trigger that gets us to put capital to work, among other things. If I were to boil it down for you, that's what we're doing. And so we had a real sweet trade there. And look at it again. It just walked straight up. The first bar that goes below the bar 2 bars ago was right there. So we're booking some profits there. Then it rips higher again. And then, of course, right in here, we're out of the trade. All right. Have they bottomed? That's a great question, Biotech. Wish you guys would tell me your name, because I reading off, Biotech. I don't know who you are. Who are you? But I keep staring at this group. Okay. First of all, that chart looks awful. That's a major head and shoulders top. I don't know what's going on there, and this is a wedge. I mean, it's just like a terrible chart. Datadog, CrowdStrike, and Net are my 3 favorite fundamental stories of cybersecurity, and they just don't look good on the chart. CrowdStrike, if I didn't have a favorite, if I just looked at the chart and didn't pay attention to what should be a favorite or what I think, I would short the living daylights out of that chart. I mean, seriously. So I'm with you on the three names. I love them. But I don't see any bottom that I'm willing to buy on any of these names. And I quite frankly don't understand it. Why do they look this bad? I don't know. Is it just because they're kind of ARC innovator type of names and that looks like that? I don't know. You know, they look terrible. So, you know, one way to do it I'm thinking about, I keep looking at, is the cybersecurity ETF bug. But even that looks terrible. This is like a major breakdown and it's wedging underneath the breakdown. I don't know what's going on in cybersecurity. And here's the leader, right? Fortinet and PANW. All right. So I think if Fortinet and Palo Alto, look at that. Look at that. Jeez. I don't understand it, but those chart patterns are incredibly compelling patterns to get short. I mean, so I'm not shorting them because I like them fundamentally, which, you know, doesn't mean a thing I like them fundamentally, but that doesn't mean I'm buying them. And the chart patterns clearly tell me I should not be buying them. So I'm going to stay out of that space. I love KMI. It's the absolute hold if you own it, you know, and at some point in here, I'm going to be buying KMI back. It used to be in my dividend portfolio. I don't have anything right now, but AMLP is the pipeline index and KMI is, you know, a major name in the index. And I like KMI. Tesla puts. Wow. Tesla breaking out of that bottoming wedge. Oh. You know, and I guess you could raise that up a little bit if you want. Well, look, Jay, I don't disagree with you. And you've heard me say this call that I am more interested in shorting and buying index puts than I am getting long here. But I don't, you know, shorting is a very difficult task. And normally, I mean, shorts can get just destroyed and end up being right 3 months later, and you're already out of the position. So the timing is of utmost importance. And I never short something that's skyrocketing, because that tells me that maybe there's other shorts getting squeezed, and I don't want to get involved in that. So what I look for are the big reversal bars down. I don't have to get the top. I have to get the start of the next decline. So what I would do, and I'll give you an example on Tesla. For instance, it has this big gap up bar and then an inside bar here. Not a gap up bar, sorry. It has this huge run, okay? And then it has this nice big up bar here and then a reversal bar. The very next bar is a reversal bar. When you take out the low of that 2-bar setup, which would be the very next day, that's when I would get my shorts going. That's when I'd buy puts. Same thing as here. You had a huge gap up. See that right here? And then the very next bar is a down bar that totally eclipses, we call that an inside bar, the day before. I would get short the next day or own puts the next day. And as you can see, you would have made money on that. So I wouldn't short something that's ripping higher. I would look for, quite frankly, Tesla to overshoot, break out above the 200-day, and then have a reversal day. And if I was interested in shorting Tesla, that's where I'd put it on. I never short something that's skyrocketing. Yeah, McDonald's looks great. McDonald's, Coke, some of the best looking chart patterns are these kind of chart patterns that you put money into when a recession's coming. You know, Coke, McDonald's. Cannabis couch. All right. The cannabis couch. Guys, if you enjoyed this conversation, hit the like button for me. Come on, you guys, you could do it. You could do it. It's just, here's what you do. You sit up in your seat and you go to your little mouse and you just hit the like button. All right? It's not hard. All right. Any info on cannabis? So you're looking at MSOS. So just to repeat, for those of you who are new, I'm not buying any individual names right in here. The only thing I'm doing is I'm buying a lottery ticket on MSOS that goes out to 2023. That's a call option to scratch the itch, Deb, just in case politicians figure themselves out before November's election and pass some type of something that puts this to the moon. My plan, Deb, is not to try to call the bottom, not to talk to you guys about fundamentals. I know you love the cannabis couch, but I've stayed off the cannabis couch to save you money. These stocks have gone straight down. They show no signs of going up. It's probably going to require some type of a government body to pass a law. Or we have to go into an environment where the market's willing to start buying innovative ideas. They're not buying the ARK fund. They're not buying cybersecurity stocks that are innovators. They're not buying cannabis stocks. So it's the wrong market for this group, which means the only thing that makes it work is a government action. Shoot me before I start investing that way. And to scratch the itch, I got call options on MSOS that go out till next year so that if I wake up one day and it's up huge, I'm making money, which will make it easier for me to start putting more money into the space. These things could double off the low. Go to $20. MSOS could go to $20. I'll be buying it with two hands on the day when it goes to 20 because something's been passed, because it'll be on the way to 200. I don't have to get the first day, but we all want to get the first day. Okay, so I own some calls that go out 2023, and I don't want to talk about it. That's where I'm at. Jess, how are you, my friend? Hey, thanks a lot. Appreciate it. But given the market pullback, I'm looking to invest a little money in an ETF, my IRA. Well, Jess, here's the time for me to say, let me make this clear for any regulator that's watching, okay? I am not giving individual advice on stocks. I'm telling you how I run my own personal money. So I couldn't possibly answer that question. I can't come out and say, now's a good time for you to invest your IRA in the market. I don't know you, Jess. I don't know your risk tolerance. I don't know what your goals are. I don't know the capital you're working with. So I can't make a recommendation like that. What's the value of the ARMR report? I can tell you what I'm doing personally. I can tell you what the ARMR algorithms are telling us. They're telling us right now the market is still muddled. There's no clear direction. The risk monitor is still red. It's not letting me get long. So personally, I'm not putting money to work. I'm buying long-term government bonds, and I'm buying gold and silver. That should tell you a lot about my opinion of the future of the market as of this moment. That's all I can tell you. As an ARMR insider, join us on the desk. You'll see in real time when I start changing that opinion. Right? I assume you're a subscriber to the YouTube channel. Every Saturday, I'll come out and say, okay, guess what? Last week, we just did a bunch of these things. We're getting more long. All right? But as of right now, I'm still defensive. You got to be logged in to YouTube to see a like button. Really? All right. Well, in that case, then go ahead and just make comments at the end of this video. Share the information. Share the video, Deb. But I know you do, and I appreciate that. All right. What's a better one? I'm not buying puts on indexes right now, Jay. Look, Jay, and I'm not telling you not to do, Tesla. You certainly could do that, but I don't buy puts on an asset that's going up, right? So you could see that the market's going up right now. I'm not buying puts. I'm looking for the reversal day, and then I'll start setting up my position. Hey, Jay, I appreciate that. And on that note, I'm going to wrap up, everybody. I appreciate your time with me today. I look forward to seeing you guys on the virtual hedge fund desk, 8:30 Monday morning for our morning meeting. Get ourselves ready for the trading session. Find out what our charmer targets are going to be. All right. And live the dream together. All right. Have a great weekend, everybody. And again, thanks for spending the time.